I decided to do this video to give you an update on my last video, which is called revealing my massive low risk, high return bet. And this is another one, which is called why the stock market will likely crash in 6 months. Those two videos are interconnected. And I had a lot of questions under this video. I got pretty close to 10,000 views, which is big for my small YouTube channel. And I just want to answer some of the questions and give you an update on it as things are playing out much quicker than I expected. It's playing out perfectly. It's giving me more confidence, more conviction that my thesis is actually right. And I'm starting to see it in returns in my own personal portfolio. But I personally believe that this great rotation is only getting started. It's only beginning. And there's still so many opportunities in the market to benefit from it. And that's what I'm going to discuss here in the video. Okay. Now, if you look at the outperformers of the Big Seven, Magnificent Seven, versus the Russell 2000, it's huge, 400%. And the Russell was up 17%. But not just with the Russell, with the Dow, with most of the 493 stocks, with everything else, the Magnificent Seven have absolutely killed it. Even the Magnificent Seven right now, there was $15.7 trillion. This is more than China, more than Japan, India, France, all these countries in terms of equities. There was $15.7 trillion more than all of them. It's absolutely insane. And some of it is warranted. Like some of it is because of earnings growth, is because of AI, is because of a quality company, but it's just not enough to justify such a massive outperformance. Big tech has always outperformed, but it has never outperformed this much. Or I shouldn't say never, but it hasn't done this outperformance in a long time. And I have a thesis of why this is actually happening and why this is reversing right now. And it makes a lot of sense. And I'm seeing more confirmation in the market that actually proves my point. Now, if you look at this very interesting fact, is the 10 largest stock in the S&P, the Big 10, they accounted 77% of the total gains in the first half of the year. That's the second highest in history. What was the highest? 2007. That's very interesting to me. What did we have in 2007? We had like a peak in interest rate around 5.2%. What did we have right now? A peak in interest rate. So my thesis is that as interest rates started to go up, this is when the Big Seven started massively outperforming in a major way. This is when fund investors and hedge fund managers and investors in general, they started selling Russell 2000, they started selling the dividend stocks, they started selling the Dow stocks, and they started piling up in the Big Seven. Why? Because with higher interest rates, the Big Seven or the Big 10 or most big companies in general, they have a very good balance sheet. They are very safe. They make money in many different currencies, not just in US dollar. So they're internationally diversified. They don't have as much debt as the dividend stocks like McDonald's and the Dow stocks and the REITs, which have sold off. And the Russell 2000 stocks, they're considered speculative. People speculate on them when interest rates come down. I know because I bought them in 2020 and a lot of them went up 300 to 400%. The Russell went up 160% from 2020 to 2021. So for them, lower interest rates is mainly betting on speculative stuff like the Russell 2000, Cassie Wood, Arc Innovation. I think it's ultimately going to make a big comeback with lower interest rates. Now people are making fun of her. I'm not, because I know what's going to happen. That's normally, it's just a matter of cycles. We have outperformers and underperformers. But in my opinion, this is why the Big Seven, they're outperforming. And this is a misconception. I believe that has caused, two bubbles. The first one is mainly the AI bubble, that because they have exposure to AI, the Big 10 or the Big 15 stocks, this is why, they've been going up, because AI is the future, they're going to benefit from it. This is a very solid reason, and I believe it exists. The second one, which is, I believe is a bubble, and not a lot of people are saying this, but in my opinion, it's a quality investing bubble that I'm seeing more and more about quality investing. And this is a whole notion that investors believe you can't really overpay for quality. So if you overpay for a quality company, as long as it's a quality company, it's a good company, it's ultimately going to grow into the overvaluations. You really can't lose money if you overpay. And that to me tells me that valuations don't matter. Now, I'm not saying every single quality investor does it. I'm not saying every single quality stock is a bad stock, like stocks like Visa. Visa was a good stock. I'm talking about stocks like Chipotle. This bubble is starting to pop. Chipotle, I believe Costco is next. I mean, maybe you own Costco, but it's the same for me. I have a lot of stocks that you could say quality companies, and I'm not selling them just because I believe they will go down. But I think there's a kind of a bubble in this area that has caused investors to believe that quality investing is what it is because they're quality companies and because they have exposure to AI. This is why they're outperforming. But maybe they're outperforming so much because of this specific environment of high interest rates. And as lower interest rates come in, REITs are going to be able to refinance again. Their dividends are going to look more attractive. The Dow stocks can refinance. Their dividends going to look more attractive. The Russell 2000 speculative stuff, they'll be able to get cheaper debt. Maybe they're going to look more attractive again. So maybe they're just outperforming and they got this massive expansion in multiple because of the environment. And as interest rates come down or the expectations of lower interest rates with lower inflation, this is what's causing the rotation and it is coming very, very hard. And I posted this on my YouTube channel, or I should say my X account. And this is stocks I talked about. McDonald's was up like 1.5%, realty income 1.5%, Pepsi up 2%. But these stocks are up now much, much more. Pepsi is up like 4% over the last 5 days. McDonald's started to move, it's up 3%. I own both of them. I own McDonald's at 244. I'm up like 6% or 6.5% on McDonald's. But all the stocks, they're starting to move. Russell 2000, you could see the outperformance now up 10%. The Nasdaq is negative on the month. That's very encouraging. And you have all these things that's happening with REITs, Dow stocks, many others. Even Nike is starting to move. Many of the other ones are starting to move. This is very encouraging, and it's really showing me that my thesis could potentially be right. And I'm starting to see the returns show up in my own portfolio because, as I said in this one, that I'm all in this bet. I'm all in 95% outside the Magnificent Seven, outside the big stocks. I'm in small caps. I'm in dividend stocks, companies with high debt, all these kind of things. This is what I'm invested in. Pepsi, McDonald's. I talked about Cheniere Energy, LNG stock. It's also starting to move. And everything outside the Big Ten that doesn't have an expensive multiple, I think will do amazingly, amazingly well. And I believe that this rotation is only getting started. It's not going to be a straight line. It's not going to just keep, going. The Nasdaq's going to keep going down and everything else is going to go up. We're going to have relief rallies, things here and things over there. It's not going to be a straight line. But I think over the next 6 to 7 months, my thesis is, if you could watch it in this video, that we're going to have this rotation. It started to happen. And in 2025, we're likely going to have a market crash where everything goes down together. And I could be wrong, but this is what I'm betting on. And this is my thesis. And I just want to clarify again that when I say a quality investing bubble, I don't mean that every quality stock is a bubble. Like I talked about Visa, we talked about other ones. We talked about ATD alimentation. That's starting to move. That's not a quality bubble. But you have other stocks like Chipotle and Costco and these stocks. They're just in bubbles. And the second thing, or the last thing I want to say, is people told me, yes, but the Big Seven also outperformed in a lower interest rate environment. That's 100% true. But the outperformance or the magnitude of the outperformers wasn't that much. The Big 10 or the Big 7 are amazing companies and they will always outperform. But it just does not warrant this massive outperformance between the Russell or the Dow and the Magnificent Seven. I think this gap is going to close and this is normal. I do own one Magnificent Seven stock and I'm not selling it just because I think stocks will go down. Long-term investments, I don't touch them. I have shorter-term investments that I keep them. Longer-term investments, mine are mostly in small caps and micro caps. I like Mama's Creations. I talked about it. It's now touched $8 per share. I mean, it's been insane. And that's the stocks I have, and that's what I'm betting on. And it's very encouraging. It's starting to play out. And although I got a lot of hate, but it's starting to play out, and I hope it continues because that's what I'm betting on. So I have, skin in the game, as you could say. And I think it's only getting started. And all the dividend stocks, Dow stocks, REITs, small caps, I think they're all going to do amazingly well. And this is just my opinion on this whole topic, this whole thing. I hope you enjoyed it. If you did, please press the like button. Maybe consider subscribing. And I'll talk to you in another video.